Let's now step into the world of commodities. There was a bit of red on crude and on metals, but Manisha Gupta is here to tell us what are the early commodity trends looking like. Good morning again, Manisha.
Thank you so much for that, Lata. Well, the red on crude oil prices continues because we have seen yet another 0.25% to 0.5% decline in the global crude oil prices, and that's exactly how we have opened trade into this one. 20 countries have zeroed imports from Iran now, and 8 countries have been given a waiver for 180 days. And we have managed that without too much of a global, upheaval. And that really has led to the crude oil prices correcting that the way they have, 16 to 18% down for both the varieties in last 1 month. The supplies have increased. The Saudi Arabia, Russia, US have increased supplies considerably. And then, of course, the demand estimates have been cut for this year and revised down for the next year as well. And that really seems to have continued to put pressure on the prices. The speculative long positions continue to see a decline as well. The crude oil prices had run up a lot, and we are looking at unwinding of positions clearly as we close towards the year end as well. So some more decline on your screens, but most people believe that it is going to be consolidation from these levels. A breach of $70 on the lower side for the Brent prices is not seen for the very near term. Well, it is about the US dollar, where we have seen a bit of a decline ahead of the US midterm election, and that in turn seems to be supporting the precious metal prices. Not very strong gains, and we seem to be trading just a couple of dollars up in the international gold prices, but it is because of the rupee as well that you are looking at higher calculations here. Flat to marginally in the green is how gold and silver prices have been. We also are awaiting the kind of sales that Dhanteras in India might have seen. Most people believe that it is going to be between 0 to 8% on the higher side as compared to last year. So just about as much as last year or marginally higher. So even if that markets have been able to do that, most people believe that that would be a bit of an achievement there. The industrial metals in the meanwhile have a lot going for them. The global price is still trading quite on the flat side. We have seen LME prices actually try to pick up a bit, not so much for the Shanghai markets, but it again is about the rupee calculations. You are looking at flat to marginal in green kind of trends here as well. Though most analysts will tell you that you have the best of fundamentals working in case of copper, aluminum and nickel. These three metals actually have been the best picks for the next 1 year as well. But what you would want to watch out for, of course, is the US and China conversation. It is still on. Markets are trying to read into some positives into that. So until that doesn't come in, there is still some uncertainty. What we are made to understand by the reports that are there out in the international websites is that the volumes have continued to decline, and there has been buying on the dips is what the metal prices seem to be looking at right now. Trading strategies, and we have them from Grow Value, who have sell calls continuing in case of the metal space. For copper, they're looking at a downside of 421. It also is a sell call continuing for the zinc prices, where they're expecting 181 off levels. But a buy in case of crude oil prices is how they would end this week. 4668 on the higher side is what they're expecting in case of crude.
Okay, thanks a lot for that, Manisha. So that's the update as far as commodities are concerned. But sticking with the metal space, NMDC is a stock on our radar. We understand that some of their mines have been shut down in Karnataka. In fact, Nigel gets us this story. Nigel is here to give us more. Concerning for NMDC?
Well, it's not good news at all, Sonia, because what's happened right now is that NMDC has around 12 million tons that they sell in Karnataka. Out of the 12 million tons, you have Kumaraswamy, that accounts for around 5 million tons, and Donamalai accounts for around 7 million tons. Now, what we understand is that just a few days ago, yesterday, in fact, this mine has been shut down. There was a fear that the lease will not be renewed, and that's precisely what's happened. So a lease expiring, that's fine. But the key reason for this lease expiring and not being renewed is that the state government, that's the Karnataka government, and NMDC, they are not coming on the same page in terms of the royalty that they'll pay. The news is that in fact the royalty being demanded for renewal of this mine is very, very high. So the stock really, why will it be under pressure? One is because they sell close to around 35 million tons. This mine, that's a Donamalai mine, it contributes nearly around 20%. That's around 7 million tons. So that's not good news at all. Besides NMDC, keep an eye out on JSW Steel because they are in Karnataka. That's from where they'll get 7 million tons. So there'll be a bit of iron ore shortage in Karnataka. Point number one, and point number two. From the entire India perspective, 7 million tons out of around 180 million tons of iron ore that is produced, that goes out of the system. So not good news for NMDC. For JSW Steel, some scarcity. And if we're looking at a smaller stock that is not very well traded, that is Sandun Manganese, they sell iron ore, close to around 1 million tons or so. So they could gain because when they go to the auction, now the auction prices of this iron ore could move higher.
Oh, that's a very important story you're breaking over here. I mean, this is a very big breaking story from Nigel. I mean, this not only changes the iron ore supply-demand dynamics, makes life difficult for those who depend on that iron ore, makes it positive for a person like Sandur Manganese. It also puts this entire renewal of lease, mining lease into picture. And, you know, I mean, I've heard this before from the Tata Group companies as well. State governments really make you wait. And, you know, you have some 15,000 people working in the mines. What will you tell them if the lease has expired? You can't shut it. And then they tell you, okay, you go ahead, you know, we will renew it in a day or two. And then you are in violation of the law. And then you're forced to bribe. Because you desperately need. You can't tell 15,000 families, you know, go take a break. You'll create a social order problem. This is beyond just a stock market issue, though at the moment it's a serious stock market.
That's right. You know, Lata, very quickly, the royalties, you know, when you're bidding for some of these mines, a lot of these miners, they've been these steel companies, they've been aggressive in bidding for these mines. So now it seems that the state government is saying, those steel companies, they were bidding so much, you know, so much.
So you give us more.
So you give us more as well. And that's where the debate is. And that's where, in fact, the government and NMDC, they're not on the same page. That's why that mine has shut down.
Okay, well, if you're asking for more royalty because somebody else is willing to pay, I don't fault the state government for doing that. I mean, that is perhaps a big source of revenue. But this all ought to have been done much earlier, before the lease ran out.
Absolutely.
You know, you do it 1 year before the lease runs out, because these are long-term, I guess, 20-year leases. So why should you, you know, wait for the lease to expire and then have this argument?
The fear is, will it go to the courtrooms now? Then the process gets, you know, then that gets really stretched. So let's hope that doesn't happen. But this is the important news from the stock market point of view. NMDC is a stock, you know, that could be under pressure. And JSW Steel, maybe in fact, you know, the supply of iron ore going out in Karnataka, not good news at all. Karnataka,
no, it's 4%. If you say out of 180 million tons, 7 million tons go out, it's 4% for the country. But for Karnataka itself, it will work out to be much
so for
more.
Karnataka, around 35 million tons is what is the permissible limit, and they are producing only around 30 million tons. You know, so from the Karnataka perspective, it's a big number.
Absolutely.
Okay, all right, Nigel, thanks a lot for that. In fact, the stock is reacting. It's now down to the low point of trade, down almost about 3% odd. This is an ongoing story. We'll try and get you some management views as well.